You're always going to have questions as an investor. You come here, you give me your 3-4 minute pitch, and I'm going to have questions. There's a lot of unknowns. But what I want to know is that you know what those unknowns are. And that every question that I put in front of you, you've already had yourself. And you either have a way to answer it, to get to an answer, or a reason why it's not relevant. Right? I don't need the answers. If you had the answers, you probably wouldn't be getting money from me. You'd have an IPO, you would go into a bag, and you'd be hugely successful already. But if you have a plan of how to attack those unknowns or why it's not relevant, then I start to see, okay, so this guy, he's identified the patterns, right? He knows the dots that he needs to connect.
On this episode of the Liberty Ventures podcast, I speak with Juan Atuesta with Elevante Capital and SAC VC, supporting early-stage startups in Latin America. In this conversation, we talk about the importance of balancing all stakeholders' interests in order to create real long-term value. The things that one looks for in early-stage startup founders in order to back them. Things like their ability to sell, their ability to identify patterns, to make decisions quickly, and the grit to really build a successful startup, as well as how they approach then actually creating data around so many things that most investors use their gut for in order to filter opportunities to then get to know founders to the point where they can make decisions on which to invest in based on their gut, as well as supporting founders afterwards by providing them with the right connections, understanding what the United States and Europe are looking for and connecting Latin America with those economies. And finally, why capitalism is so important as a tool to elevate Latin America and elevate the prosperity of humanity as a whole. This was a great conversation that I hope you enjoy right now. All right. Well, Juan, thanks for joining us on the Liberty Ventures podcast today. It's really a thrill to have you here. And for everyone who is not familiar with you already, I'd love to start by just having you introduce your background and what's led to what you're up to today.
Absolutely. Thanks. First of all, thank you so much for having me. I'm very excited to be here with you. So I'll try to keep things short on the intro side of things so we can get to the more interesting stuff later on. But essentially, I've been around investing and trying to figure out what makes a company good, what makes a company great, and what makes a company fail. Right? And that sort of has been the thesis that's driven my career and piqued my interest. So I started doing work in strategy consulting at first, just trying to understand, the world of companies and how they worked. Once I was able to sort of merge that with my interest in finance and understanding, a company can be great, but if it's not profitable, if you can't sort of keep the light on at the end of the day, then you can't be a great company. And so I did an MBA, and after that I went sort of what I called the dark side and started investing and started working with private equity, very late stage deals and equity. So things that are probably $1 billion plus. We were doing reprivatization of companies. We were spinning things off. We were carving things out. And that was, a great experience, learning how to optimize a company and how to take something that's very big, that's been around for a while, and make it leaner, make it work better, and ultimately give your shareholders a return. But during those days, I was fortunate enough to have the opportunity to work with one of the growth stage funds of our main client. And I understood, for conscious capitalism, there's a difference between shareholders and stakeholders, right? And that, I think, working with that growth stage fund really hit that point home. And it was, the difference between trying to optimize return for investors and shareholders and understanding what value is across the entire sort of chain of shareholders. And I was much more interested in building things, investing in potential, trying to figure out where things could grow and being excited about something at the end of the day. And so that very quickly drove me to realize, I was probably at the wrong stage of investing. I loved doing what I was doing, but I just wanted to do it at an earlier stage and focus on different things. And so I ventured into venture capital, convinced a family office to be crazy like me and try to set up their own sort of like venture capital vehicle. And through that, we learned, how to set up a fund, how to define what your thesis is, how to partner with the right people, how to find the people who are going to, hold your hand and guide you through this experience, give you the great deals, show you what they are, and sort of collaborate with you and share your experiences. And I've loved that. It's been an amazing journey. And I'm now in the process of sort of taking that to the next level.
Before we get into what you're up to now, let's go back to this delineation you made between shareholders and stakeholders with conscious capitalism. And I think the nuance of this is really important because it's not that there really is a delineation between them in conscious capitalism, but shareholders are just one of many stakeholders to consider. And when you think about all the stakeholders as being interconnected with each other, you start to think in a win-win-win mindset instead of the idea of maximizing returns for shareholders at the expense of other stakeholders. And obviously with what you're doing right now, you're still trying to get the best return possible. You're talking about creating real growth and value. It's just approaching it in a different way from thinking in terms of trade-offs, thinking in terms of abundance for everyone.
Absolutely. And don't get me wrong, like part of what I love about conscious capitalism is it's still capitalism, right? At the end of the day, I still want to make money. I still want to, so my investors expect the best return I can give them. But at the end of the day, I think data really shows you this. It's the companies that don't go after that maximization of shareholder value, but have something else and understand there's a lot of other factors that sort of, excuse the redundancy, but factor into the success of a company. They do a lot better in the financial aspects. Right? And I think kind of having that realization and allowing yourself to, and pushing yourself to look at all the other factors and look at all the other stakeholders that are involved in a business, that forces you to look beyond just your bottom line. And so you're now thinking about, my customers. So if you serve your customers better, your product's better, they're more loyal to your company, you'll probably sell better and you can have better margins. And if you think about, all the other stakeholders like that, all these little things add up to improve your financial result, but you're not after that as your main driver.
100%. So let's talk a little bit about Elevante Capital and what you're doing with that specifically in order to maximize these returns and value for everyone.
Yeah, absolutely. So Elevante Capital, as I mentioned, it's an experiment, right? So a family office, a single LP, they were crazy enough to trust me and say, hey, let's understand this asset class and see what we can do. But the next iteration of that, and sort of what I'm building now with my business partner, Diego Santiago at SAC VC, is really, going beyond your single LP, your single stakeholder, to really mapping out where we are interested in terms of VC space. And we believe in LATAM and Latino populations across the world immensely, right? We think there's huge potential. We think there's huge problems. And so at the intersection of that, there's obviously a great return. But when you look at what's happened in the past few years, so 2020, 2021, there was a lot of cash being thrown at LATAM. We had Tigers of the world, the SoftBanks of the world going in, investing heavily, driving up valuations. Everyone was happy. Entrepreneurs were, growing like crazy. They had a lot of cash coming in. And then all of a sudden people realized, hey, it's not as easy as just throwing cash at these things. And I think that goes to the point of it's not just about the financial, it's not just about profit, right? You have to really understand the entire chain of stakeholders that are involved in any single business that you do. And if you don't, then you're not going to be successful. But when they realized this and they pulled themselves out of the region, there was a huge gap there where companies that were growing, we had a lot of ideas be built, and then the little sort of cash you need to get to that more evolved or more mature place in your sort of company's life, you didn't have that capital. It was gone. And the capital that was in LATAM had been pushed down to very early stages. Valuations had been, driven up. And so now there was no one betting on the companies that had proven themselves, had gotten to the point where they had product market fit. They just needed to kind of expand now and set a foothold, not only in LATAM, but in the world. And so that's what we're trying to bet on. We're betting on, kind of taking these companies, taking our experience in playing in more mature, developed VC ecosystems like the US and Europe, and sort of bringing these ideas, bringing these problems that have huge markets, huge populations that they're serving, and sort of, driving home that financial return because you're betting on great problems that have, a lot of a big market to play in, but also betting on great companies that come from our region and our type of people who are, driven. They're eager to sort of evolve, and we're helping them sort of like catch up and bridge that gap between where we're at in LATAM and Latino populations across the world and more developed ecosystems.
Amazing. So you said earlier that you've spent your career thinking about and really working with great companies and figuring out how to find the best companies at the early stage, helping them grow. Let's talk a little bit about your process there. So when you're vetting companies and opportunities, what are some of the key things that you look for?
And I love that question, because that's the other thing we're looking at reimagining at SAC Capital. So traditionally, the way things have been done is in earlier stages, you're betting on people. And your gut is your main driver, right? You're meeting with founders. Obviously, there's a few benchmarks, checks that you have to tick in terms of the market size and feasibility of the idea. But at the end of the day, you were using your gut to feel out which founders you believed were going to make something happen. And it was probably not the idea that you were pitched at first, but it was going to be something, and it better be something really big in order to be able to meet your return requirements. And so the way we're thinking about it, what we're trying to do differently is, as we've invested previously and as we've operated or be part of the operational teams in companies, we've realized we now have the ability to use data and technology in ways that sort of can very quickly break or shift that risk paradigm that we had in terms of VC. VC is obviously a very risky asset. Like I said, you were investing with your gut, you were taking huge risks because there were huge returns. But as the asset class has matured a little bit more, we have more data points. And as our technology has evolved, we can use tools like generative AI, and we can use data-driven insights to move away from that long tail of risk more towards where we can understand things better, we can connect things better. And so as you start connecting the dots, you start reducing that risk by using technology, by using all the data that's out there, organizing it, and looking at it in very different ways. And so the way we've done this is we've mapped out key factors that ultimately we thought led to success, right? And we fed a model, and ultimately AI is helping us redefine that, really understand, what are those factors that are really going to determine success or not. And obviously, it's not going to tell you, look, this one's going to be the company you should invest in. It's not as advanced as that, but it gives you a more redefined sort of playing field where you can then ultimately go out and use your original criteria that you use in VC. So look at the team, look at their ability. For example, I think one of the key things that I always look at is the ability to sell, right? As an entrepreneur, you have to sell your dream to investors. You have to convince people to tag along and come on board and invest in your business. You have to sell that dream and the execution of that dream to your team. So you have to attract the best talent. And then you have to sell that product to customers, right? You have to have someone who wants to buy your product or service. And so I think that's one of the key things. Originally, that would have been harder to measure. And so now we have different data points that drive these very important things and can at least give you an idea of, look, you're probably going to be within the first decile or the 90th decile in terms of success and what other companies that have been successful look like.
You're starting with the recognition that a lot of investing comes from the gut, but you're trying to identify the data points that tell you quantitatively whether your gut is right or to help guide where your gut is going. Is that about it?
Yeah, and I think it's ultimately narrowing down the playing field where you will then apply your gut. I think it's never going to take away gut. It's never going to replace gut. It's going to assist your gut, and it's going to reduce the time you spend looking at things that you will ultimately sort of through your gut rule out as a good investment.
One thing you mentioned that you look for in founders is their ability to sell, which is absolutely critical. I'm curious if there are any other things that you're really looking for in those founders.
Obviously, I think one of the main things is grit. And this is mentioned in every single podcast or every single article, everything you read about entrepreneurship. Grit has to be one of those qualities that obviously you need, right? This is very hard. And it's not easy to take something that doesn't exist. You have to be a contrarian, right? You have to have an idea that no one else has had. Otherwise, it's not a good business to be in, right? If someone else is doing it, you either have to do something no one's done or do it differently enough that it pays off. But I think part of that component or a component of that grit is founders that are very down to earth in their ability to quickly recognize what they're doing right and what they're not doing right. So as a founder, if you have this ability to recognize patterns or sort of pathways towards success or failure, and you're brave enough to make quick decisions, I think that's one of the main differentiators between an amazing founder and an average founder, right? You have such limited resources, including time, that if you're wasting time, even a little bit of time, just kind of overthinking things and looking for, reasons to do one thing or another, and you have the ability to quickly identify and act, then you're going to get burnt out. You're going to get disillusioned, and you're going to have a very hard time, which ultimately, translates it into less grit and less probability of being successful.
Okay, so you just identified 4 big things there. It's the ability to sell, the grit that it takes to get through the hard times, pattern recognition within founders, and then ability to make quick decisions in order to act on opportunities and to be able to find out really what is working and what's not through those decisions instead of just thinking them through and not taking action.
And I think one of the ways I try to identify that is you're always going to have questions as an investor. Right? You come here, you give me your 3-4 minute pitch, and I'm going to have questions. It's just part of the dynamic, and I'm okay with having questions. It's part of it, right? It's part of the risk that I take as a venture investor, early stage investor, is that there's a lot of unknowns. But what I want to know is that you know what those unknowns are, and that every question that I sort of put in front of you, you've already had yourself, and you either have a way to answer it, to get to an answer, or a reason why it's not relevant. Right? I don't need the answers. If you had the answers, you probably wouldn't be getting money from me. You'd have an IPO, you would go into a bag, and you'd be hugely successful already. But if you have a plan on how to attack those unknowns or why it's not relevant, then I can start to see, okay, so this guy, he's identified the patterns, right? He knows the dots that he needs to connect. And then he's going to be able to use their storytelling abilities to get investors, great employees, and customers to ultimately execute on that plan that he has.
Amazing. And I imagine you're getting this from them by asking them those questions to find out what unknowns they've identified or what doesn't matter. But are you getting anything from actually digging into the company and seeing, reviewing decks or their data rooms or things like that? Or is a lot of that coming from your interactions with the founder?
No, it's both, right? So anything that's data-driven, we use our tool, we go in, we look at the data rooms. A lot of times financials aren't, there's not a lot of data points to make insights, to have insights. But there are data points, and we use our tool to sort of, expand on that data that's there and try to have data-driven things. And a lot of the times you look at that and it's not enough to have a conversation. For a VC investor, your most limited resource is time. Your pipeline, you're probably getting 1,000 companies that are in your inbox a week, plus the ones you really want to meet. And then you only have so many hours a day that you want to spend on, and you want to move quickly. Because it's always, there's always someone else who's going to want to invest if you're not investing yourself. And so I think it's a matter of having some data points that allow you to do very, very, thoughtful or technology-assisted initial due diligence. And then once you get to that point where you're actually talking to the founders and to the team, then it's a lot more gut-driven where you can ask these questions.
If any other investor listening to this wanted to do something similar to be more data-driven, obviously keep anything proprietary to yourself, but what kind of advice would you give them to start creating that data-driven approach to filtering in the beginning before getting into the gut-level decision-making after you've filtered them out?
So we have a term that's called data-driven organization. And it's not the organizational stuff, but how we organize ourselves. And it's sort of taking the approach of a data scientist, trying to understand, like, if I had all the data that I wanted, how would it be structured for me to sort of feed my model? And then you work backwards and you design all your processes based on the outputs that you would want if you had everything you needed for a perfect sort of feed to your model. And so when you sort of back engineer those processes, then you end up with a way to do things and a way to sort of record things and your processes that will give you that output ultimately. Even if you don't have the data, you have the structure, you have the output, and once you start gathering that data, then it's going to be a lot easier to implement. And so we always sort of work backwards from the end state and try to get there. And I think organizing your thoughts, your processes, your team in that way is going to allow you to use either your own tool that you built, which is, it's not easy. And I say this because we've tried ourselves and we're doing it and there's nothing out there. But if something comes out as a product, knocking wood, maybe we're the ones that bring it to market, then you already have the food for that model. Because if it's garbage in, garbage out, right? So the more you can sort of organize yourself to have that data in the best way possible, the more you're going to be able to use it down the line and be more efficient with it.
Brilliant. So we've been talking about how you're picking the companies to invest in to start with, but I'm curious, after you've made the investment, how do you as a venture capitalist approach working with the startups that are in your portfolio? So
there's my personal preference, and we at SAC-VC, we try to work like this, and there's obviously different cases, and depends on whether you work with me or you work with Diego. Diego has a lot more operational experience than I do. He's much more technical. So obviously he's getting more involved because teams are sort of dragging him in. But I think the best way to support a company is just allowing them to come to you when they need the help. Obviously, in your initial assessment, you're going to point out things where you're like, oh, look, guys, we believe we're going to be able to help you with these things, but we don't want to impose anything on you, right? So by having our capital invested with you guys, you also have access to all these other things that we believe we can help you with. And one of those is we understand AI quite a bit, and we understand data structures quite a bit, and we understand how to apply it, not just kind of use your ChatGPT bots, which is great. I'm not saying obviously use that, but go a little bit deeper, right? Use the data structures, use generative AI in a more sort of custom way. And if you feel like we're going to add value, and obviously we invest in you because we feel that there's a lot of value there that we can add, but we don't want to impose anything on you. And then that creates a relationship where you enjoy working with us. We're not pretending to be your boss or pretending to be your operational or tech team. We're just sort of feeding off each other. We're building things together. We'll probably sort of bring you along with other of the founders that we have, and we can have these sort of value add discussions as a group, and where, more brains, more brain power sort of come out with great solutions for everyone.
So it's not only accessing your network, it's accessing your insights, your experience to go and work with your startups and help them grow.
Yeah, we'll roll up our sleeves. If you want us there, we'll be there. Obviously, as much as we can. We're like I said, we have limited times. We can't do that for all our portfolio all the time, but when it matters, we'll be there. And I think the other great thing that we have is, like I said, we've played in the US, we've played in Europe, we know how it works. We speak the language in terms of what these investors are looking for and what they need to be able to invest in these companies. And we also speak the language of these companies in Latin America or the Latino markets, and we know what they need, and we know how to bridge that gap. So I think a huge part of our value add is we're able to connect, and we're able to be that bridge between great ideas, great tech potential, and capital that wants to access that, but doesn't really know how to do it or how to understand, where the winners are. And once you bridge that, I think there's something really beautiful that happens. It's like you close the gap, and the flywheel of VC and LATAM starts kind of going on itself.
Before we wrap up, let's talk a little bit about why you're focusing on Latin America. What's the opportunity there, and why you're focused on that?
So there's obviously the personal reason. I'm from Colombia. Diego's from Guatemala. so we're from there, right? These are our people. This is our continent, our problems, and we understand that the problems, right? Having lived there, having worked there, having invested there, you really get a feel of what matters and what's going to solve these things that matters, right? We're probably in very different stages in terms of what the U.S. would be looking at as what an interesting problem is, right? And not only that, but the solutions have to be customized for our specific sort of, demographics, culture, and everything that we have. It's not only as easy as copy pasting a solution that's been done a million times, where you take something that's worked in the U.S., worked in Southeast Asia, you bring it in. If you don't, if you tropicalize it, it won't work. But more than that, you need to really understand, the dynamics and how things are. We're a very rich region in terms of potential as a region. You look at us, our GDP is incredibly attractive. Digital penetration is incredibly attractive compared to other markets. The potential in terms of the workers that we have, our spending habits. So all that is very attractive. But then we're also very different and segmented in terms of you have multiple countries, you have multiple languages, you have multiple regulations that are there. And so being able to navigate all that, if you're able to, can bring home extreme amounts of value. Again, not only financial, but thinking about conscious capitalism, it's value at the stakeholder level. And so that's what we're excited about LATAM.
As you pointed out, part of this is personal. You're from Latin America, so you both understand the region and I imagine want to support its growth. And you said you're a capitalist. You're approaching this from a capitalist perspective. Why are you leaning into a capitalist approach to supporting Latin America and building this up?
I think that's a hugely relevant question today, especially in LATAM, right? You look at Colombia, we're under a socialist government. You look at many other neighbors, they're there as well. And what we've seen and what sort of history has shown us is that because of the stage we're at in terms of economic evolution in our region, you need capitalism. Capitalism and innovation is the main driver of economic growth. That's been proven all over, right? Entrepreneurs are the key drivers of economic growth and innovation and sort of bringing regions from one stage to the next. And the way that socialists are trying to do this hasn't worked. And it's, in our region specifically, has driven away a lot of capital. So a lot of investors have gone away. A lot of the great founders are now thinking, maybe I just go to the US and do it from there already. Why even waste my time here if it's going to be really hard for me, if I don't have the structural support and I don't have the access to the capital? And so I think, capitalism allows you to bear a lot of risk. Obviously, you have that return that you're looking for, and it's risk return, but that's why it's beautiful, right? Because I'm taking a huge risk because I believe in the potential down the line. But if I don't have that drive for potential down the line, then it's not worth me taking risks, right? If I'm not getting that capitalist kick out at the end of the day where I made a return, then I wouldn't even bother taking the risk. I would just kind of stay where I'm at, where this state, and things wouldn't evolve.
That's beautifully put, Juan. And I just want to say as we wrap up, I really appreciate you taking the risk and doing this incredible work to support Latin America and drive human prosperity forward with us. Thank you.
No, thank you. And we're just happy we enjoy this, right? We get a kick out of it. It's very exciting. And we love doing this with great people. So, it's having the ability to meet people like you and having these great conversations that also kind of keep us excited. And the fact that there's more people trying to do this, and the more the merrier. And we're going to eventually kind of drive that growth and that innovation that we want to see in our region.
Fantastic. Well, Juan, thank you so much again for joining the Liberty Ventures podcast today and sharing your insights and experience with the community.
Thank you. I appreciate the opportunity, Alexander, and hope to stay in touch.